The difference between a long-term investor and a swing trader is millions of dollars in net profits. It's just that simple. But again, it's probabilities. I want to be the house, not the gambler. I want to be the casino, not the gambler. Okay, what we're seeing for the last week is exactly why Bitcoin was invented. Why do charts continue to repeat? I mean, how is that even a thing? And the answer is simple. Do you know who was trading this back then? People like you and me. And he's like, we might have to do a 50 basis point rate hike. Like, dude. We got to talk about today's day because it is a wild morning session. The S&P futures are getting absolutely annihilated. We're talking down like 85 points on the S&P futures. That is a big drop. Looks like we bounced just a little bit ago, down 78 points. Dow futures are down 626 points. So we're seeing a major renewed sell-off. Yesterday, we had a little bit of a reprise. We had a little bit of a bounce that came on the back of a little bit of structure in the U.S. banking system. We saw no U.S. new failures of banks, and that was very important. But in the overnight, Credit Suisse starting to collapse. We saw Credit Suisse getting crushed here today, down about 20. Let me check right now. Credit Suisse down over 20% here, close to 30% in fact, and that is creating some major panic. Let's start out with the banking sector. Number one, I got to say this. The first off thing is that this is ridiculous that this is coming as a surprise to regulators, to the Fed, to the government. Like, think about this, guys. You just saw the Fed in basically 1 year raise interest rates from essentially 0 to 5%. All right. How does anyone not think that's going to not break the system? Okay. Again, in addition, and this is something I've said for a long time, I've gone nuts on this. I've said that you essentially have a scenario where the market and investors got addicted like a drug addict to their drug dealer. The Fed was always saving the day. They were always coming in and basically, giving us more drugs in terms of quantitative easing and cheap money. So the fact is, when you go cold turkey, what the heck do you think is going to happen? And here we are today with the banking sector a mess. Europe is now a mess. We're seeing, again, the banks in Europe getting absolutely annihilated today. And again, it's kind of common sense. To me, it's common sense. Now, in all fairness, is it the Fed's fault that we're in this predicament? Partially, yes. And the reason I say partially yes is because, they said transitory. They were wrong. They had to play catch up, which means they had to jack rates up in a short amount of time, insane amounts. And remember, we're not just talking about going from 0.25% to 5%-ish. We're talking about the rate of change, how quickly it happened. And we're talking about how many hundreds of percentage points that was an increase from 0.25 to where we currently are. Now, in all fairness, banks like Silicon Valley, they deserve a lot of blame too. These guys are probably getting paid millions of dollars. In fact, I saw that the CEO of Silicon Valley Bank cashed out like multiple millions, like $3 million just before this collapse in stock options or whatever he was doing. And ultimately, these guys are getting paid this type of money. You better be damn sure you understand the risks when you see the Fed raising rates. Now, you know who's innocent? The retail investor that's gotten caught off guard in this stuff. All right, we had crypto shorts just before this latest dip. Then we went long crypto in verified investing crypto just going into this latest bounce. So again, we've been prepared because we're swing traders. The difference between a long-term investor and a swing trader is millions of dollars in net profits. It's just that simple. The dollar is getting a pop today. Look at this. Now, why is the dollar getting a pop when inflation's coming down? I mean, riddle me this. The answer is very, very simple. The dollar is getting a pop. It's ignoring the PPI data. Instead, you know what it's doing? It's looking at the craziness in Europe. When people get panicked, when they get so fearful, do you know what they do? They buy US dollars and they also buy gold. You know what else doesn't like a higher dollar? Bitcoin. Bitcoin, again, pulling off yesterday's high. But look at this chart. This is why I use charts in every day. I had a long and verified investing crypto in Bitcoin. You know where we unloaded it? We unloaded it right into this trend line here. Look at how this trend line has caused price to pull back every time. And so again, the thought process here is, well, don't try to reinvent the wheel. Just follow the freaking charts. And that's all I did. So yesterday we unloaded just above 26,000 our Bitcoin position, and it's pulled back since then. Now, again, part of that was also a 3-bar surge. We know that in trading, when you have 3 mega green candles to the upside or 3 mega green candles to the downside, in general, you get a bounce or a pullback. In this case, when it's a sharp move up, you get a pullback to the downside. Again, probabilities. I deal in a world of probabilities. Remember that. It's nothing guaranteed. There's no sure thing. You could easily have losses. God knows I have losses. But again, it's probabilities. I want to be the house, not the gambler. I want to be the casino, not the gambler. Okay, this was resistance on Bitcoin. Now, Bitcoin's hanging in there today in spite of a stronger dollar. Now, that's kind of weird. Why is Bitcoin up when the dollar is surging? The answer is so simple, and it's so poetic for why I like Bitcoin long term. Now, you guys know, shorter term, I still think we're going lower. You know, that hasn't changed. 12 to 13,000 first target, maybe 9,000 second target. But on the longer term basis, what we're seeing today, what we're seeing for the last week is exactly why Bitcoin was invented, why it came to fruition. It's because when you have this craziness in the system, when you have scenarios where the government has to come in and backstop deposits, when you have all this stuff because these banks are not doing and following the rules, or essentially they're not managing their own risk, you know what is okay? Bitcoin. Investors are selling banks and actually buying Bitcoin. This should be the most freaking exciting thing to any of us that we're seeing out there, to see this occurring. Because this shows you that there is an alternative. That for some of us, yeah, I have most of my money in banks, for absolutely. But again, am I looking at Bitcoin as a long-term potential to offset risk in the banks, to offset risks of printing of money? Absolutely. And that is why what you're seeing in this latest crisis is why Bitcoin will survive, in my opinion, and will thrive down the line. Okay, so what's going to happen here? For me on Bitcoin, I think you're going to pull back to this line right here. You might get a little bit of a bounce. Then I ultimately think you'll retest down here and eventually break lower. I still think, again, this 18,000 and change level will be meteoric support. I plan to buy some Bitcoin off that level. There's another level here to look at. Take a look at this. If we put a trend line in right here and we put it from this low and just curl it up, look at where that line coordinates, right at the 18,000-ish level, 18.2. So to me, when you have a confluence, when you have 2 or more trend lines converging, and if price comes in there, that is a huge level of support. I shorted it yesterday in Verified Investing Crypto. Resistance, resistance. Guess what happened yesterday? Resistance. We're in the money on our short in VerifiedInvestingCrypto.com. So again, not a lot in the money, but nonetheless, just following the charts. While everyone else was talking major breakout new bull market yesterday, we just simply sold our Bitcoin into resistance and we shorted Ethereum. Very simple. You know, again, we're not trying to invent the wheel. I don't try to invent the wheel. I let the charts talk to me. Essentially, looking at this chart, when I first started, 20 plus years ago, it was a foreign language to me. I was like, what the heck, man? It just looks like a bunch of weird ups and downs and reds and greens. Heck, it looks like a Christmas tree. But you know what? When you learn the language of the chart, it speaks to you. It doesn't tell you what 100% is going to happen. It tells you what the probability, a high probability scenario is. Gold is ripping higher today. Beautiful move to the upside. And look at this move here. Guess where we're headed, guys? I still remember when we were trading down here, everyone was like, oh, Gareth's insane. Gold stinks, da-da-da-da-da. Yet it was still the best performing asset between the S&P 500 as well as Bitcoin. And then look at the run it's gone on here. This was my prediction, is that when the Fed finally gets to a point where they have to pause because things get so messy in the economy, you know what's going to happen? We're going to see gold rip. Now, gold is going to have resistance coming up at this upper trend line around $1,955. That is okay. That's normal. It's going to have a pause, a pullback, and then it's going to bust through and break out. And then you know where it's going to go? It's going to go to your double top high right here. Essentially, you're going to have inflation staying elevated, which is then going to be the bull case of long-term for Bitcoin as well as gold. And you know what's crazy? So you're going to have gold resistance at double top, triple top, essentially at 2070. But I want to show you this chart, guys. This is the chart that blew my mind. So essentially, remember this, 2018 to 2020 up, and then sideways to lower for the last 2 to 3 years. We're going to go to the weekly chart. I know some of you guys have seen this before, but if we go back to the 1970s, the last time we had these issues, the last time the U.S. faced inflation that was as high as what it got to, you had the same pattern of performance. Basically 2 to 3 years up, 2 to 3 years sideways down, and then look at the bull run that gold went on from essentially a low of $110 to a high of almost $900. Why do charts continue to repeat? I mean, how is that even a thing? And the answer is simple. Do you know who was trading this back then? People like you and me. People like the millions of people that trade commodities that were influenced by the scary nature of inflation, what was going on with the Fed, all of it. You know who's trading it in the current time frame? If we go back here, you and me, same thing. And that's why it repeats, because the same fear that we feel, the same emotion, the same greed, it's repeating in any time frame. You could go back 1,000 years. You could go back to ancient Rome. You could go back to ancient Egypt, and the same emotions were present. And by the way, how long ago? I mean, think about this, right? How long ago was it that Jerome Powell testified in front of Congress? I think it was like last week or the week before. I think it was last week, in fact. And he's like, we might have to do a 50 basis point rate hike. Like, dude. Now, basically, that was just before the banks collapsed. And it really is kind of crazy, but bottom line is, I guarantee you there's no 50 basis point hike coming. Probably not a 25 as well with what's going on now in Europe. Think about that. The Fed may cut. If things get bad enough in the financials, they may have to cut before the year ends.